Maybe I'll finally get that blower I ordered from my Briggs & Stratton. Good Thursday morning to you. You're watching your economic market weather report. My name is Jason Graneman, your lone slayer for the day. Let's get into it. Dow Jones, rainy today. And is it a little flat? Well, in my opinion, off by 200 points is a little flat. So it's in a downward trajectory based on yesterday. Another 200 points-ish, up, down, give or take. Another 200 points-ish off of what it closed yesterday. So a little sign of weakness. And we're going to get to the treasuries in a second, but that does transition, according to today, a bit better interest rate for mortgages. So the Dow rainy, really, I don't see any sun out there on the Dow region today, but the Bitcoin market, or crypto, Bitcoin is down at 58. See the correlation? I'm not saying that they always correlate, but I am saying that A, if you're in crypto, or B, you're in the standard equities of the stock market, watching both can definitely be a benefit, especially when we're trying to anticipate the market. That's really our goal, anticipation, not prediction, anticipation. Anyway, cooler temps over in the Dow region. Over in the Treasury sector, the 10-year Treasury has come down. As of right now, it's under 1.6, and it's been bouncing a little bit around 1.6, but 1.58 at the time that I made this video, and that is giving us a slightly better mortgage rate, or at least it should. Time will tell. However, with that type of range, I would say about an eighth better in cost. Not an eighth better in rate, but an eighth better in cost to achieve the same mortgage rate that you were attempting to achieve yesterday. So it's sunny skies. It's breaking a little bit warmer temperatures over in the Treasury, or what we would also call the bond market. So the bond market's a bit warmer today. Feels nice. Now, with the bonds having some good news today, even though it's small, and the Dow retracting today, and so it's slightly rainy and cooler, I'm still calling this overall flat. These are flat reactions.
Flat. It's so flat. I didn't even know.
When I see a trend of flat in the marketplace, I tend to want to see or anticipate what's going to cause the market to shift radically. Now, I'm not predicting anything. As you know, I don't do that on this channel. However, we should be looking for things, news, events that would impact the market and create positive or negative impact on the market. Now, where you sit with your investments, the same event could become either positive or negative to you. So it's up to you to figure out what events are going on and begin to anticipate. Remember, nobody likes to be surprised. So projecting into the future, what's transpiring? Because right now we're flat. We can't stay flat forever. History shows the market just doesn't stay flat, and perhaps not for very long. This is not an alarm. This is simply bringing to the point that when the market is flat, that doesn't mean we should be sitting back comfortably. We should be looking for what is the next move, which direction will the market go, so that we can stay ahead of the move and, again, position ourselves based on some intelligent anticipation.
Okay, I'm gonna save it with the solo.
Bow, bow, I'm Derek, and I can sing high like this. And I can sing high.
Side note, Jerome Powell. We're going to get into that perhaps tomorrow. Will he get another 4 years? We'll see. But now there is some discussions going on questioning whether or not he will get another 4 years or if Joe Biden will appoint someone else. this is a good thing to start looking at. Remember yesterday, anticipation. What should we look at next? Well, this is a great item to start looking at because who runs the Fed could very well determine how the Fed approaches our inflationary market going into next year. Again, this will help you determine where and how you want to be in the market, if you want to be in the market. Jerome Powell, research it, get back to me. Love to know your comments, what you think. John Deere is in the news, and some good news at that. John Deere is coming off of a strike. The strike ended today. So if you've read or heard anything about a John Deere strike, well, it's ended. And that rolled out overnight. So it's having an impact on their stock price, which is up 2%. Keep in mind, their stock has been up over 30% year to date in 2021. And, well, wages for employees are going up 10%. And that goes into effect immediately. So that's great news across the board for John Deere, that it appears that since they came to an agreement, that everybody's happy. In fact, this deal itself that they've agreed to now is what was offered some weeks ago, and the employees union basically tried to negotiate, go back and forth, but essentially we're at the same deal. Getting back to anticipation, and I have talked a lot about anticipation, and I probably always will. Anticipation takes really paying attention to what's going on, seeking out information. Really, nothing is going to be handed to us, especially when it comes to the stock market. So we need to really look and search and hunt for information, and bear in mind that anticipation is simply an analysis of what's likely to happen or what you feel is likely to happen. So getting to anticipation, there is something that we should discuss. So yesterday I talked about and asked you folks to look at items going on in the marketplace that, well, maybe we should have some anticipation and analysis with the market. The Dow Jones has rolled back. The excitement of the $1 trillion infrastructure bill has calmed down. What's next? Well, if we're looking for government decisions or influence in the market based on what the government is discussing right now, and this may not be popping up in your mainstream news feed, but it's certainly worth looking at, because if we forget that it exists, we could be caught flat-footed. We don't want to do that. So the debt ceiling itself is still a looming issue. So we extended it, we as a country extended the debt ceiling issue till December 15th. In other words, we allocated enough money to pay our debt, and that is now going to come back into focus. Now, I don't write the news media. However, we should put it into our focus, because that is going to definitely have some perspective or influence on the marketplace. So the more information that begins to drip out on the debt ceiling issue, remember, December 15th is the next target date to where Janet Yellen is claiming that we won't be able to pay our bills beyond December 15th as a country. So this will probably, we'll see more of this drip out into the news. Now, if we start to see some money calm down or some momentum come out of the equities market, perhaps we'll see that transition to the bond market. At least that's what we're hoping for, to see some relief in the mortgage rates. Now, they do tend to flow somewhat hand in hand, though they're not directly equivalent of each other, but that's what I'm looking for. And with regards to the bond market and the 10-year Treasury, I'm still hunting for that baseline. I think we might be at a baseline of about 1.5. We're showing signs of it. So what I'm going to be looking at in the charts, and if you want to as well, is watching that 10-year Treasury. Will it float down to the 1.5 arena and bounce back, or will it break through that baseline that it's temporarily created for itself, apparently, over the last week or so? That's where I'm at. I watch the 10-year Treasury, and the 10-year Treasury simply displays the higher it goes, the higher your mortgage rates tend to go. As the 10-year treasury drops, your mortgage rates tend to improve. So I watch that 10-year treasury like many people in the mortgage industry do, and looking for these bottoms and top lines, trying to find that channel gives us an idea as to where rates will be for the moment. When it breaks through, there may be some momentum there that will create a new baseline. Also, when it breaks through that ceiling, like it did that 1.4 ceiling, it's looking to drive some momentum in, well, an increasing mortgage rate market. So some different things for you to take a look at. Let's talk more about this debt ceiling in the future. Bring your research, put it in the comments. I would love to hear feedback for what you're seeing and any comments that you may feel would be beneficial to our discussion. Thank you for watching the Economic Market Weather Report. My name's Jason Graneman, your loan slayer for the day. And remember, it's not work, it's a lifestyle. And by the way, anticipation so your portfolio doesn't look like this.
Jesus!